This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, August 12, 2015. Euro dollar. So the euro continues to be locked within a downtrend despite this recent corrective rally, and the market will need to take out resistance at 11:30 to take the immediate pressure off the downside. Until then, there is risk for a lower top and fresh downside extension back below recent support at 108.10, below which exposes that critical multi-year low from earlier this year in March at 104.62. Sterling dollar. So cable has been consolidating over the past several sessions, though the outlook remains constructive while the market holds above 153.50. At this point, a higher low is sought out by 153.50 in favor of the next upside extension beyond recent highs that we saw at 156.90 and towards that 2015 peak set earlier in June at 159.30. Dollar yen. So dollar yen is broken back above 125, and this break opens the door for an immediate retest of that 125.85 multi-year high that we saw from back in June. And any setbacks now should be very well supported ahead of recent lows at 123. At this point, the overall structure remains highly constructive, though monthly studies are overbought, so there is still risk for any limited topside when the market tries to take out 125.85 in favor of some additional consolidation over the coming weeks and potential correction lower. Euro Swiss. So Euro Swiss continues its surge following that break that we saw several days back above some multi-day range resistance at 105.75, and this break now exposes a more significant rally up towards 110 since the market recently took out that 108.15 February peak. At this point, look for any setbacks to be well supported into the 106.90 area. Aussie dollar. So Aussie has come back under pressure after stalling out ahead of 75, and this suggests that the market could be poised for a bearish resumption below recent multi-year lows at 72.35 and down towards next key psychological barriers at 70. At this point, only a breakback above 75 would take the immediate pressure off the downside. Dollar CAD. So dollar CAD has seen a bit of a correction since posting fresh multi-year 11-year highs at 132.15, though the market has stalled out with setbacks being supported just under 130 at 29.90. Still, there is risk for additional corrective action down towards recent support in the 128.60 area, though ultimately a higher low is sought out in favor of a bullish resumption. Kiwi dollar. So Kiwi continues to consolidate just off its recent multi-year low at 64.90, and the market could be poised for a fresh downside below 64.90 and towards next key psychological barriers at 60 further down. At this point, it would take a break back above 67.40 to take the immediate pressure off the downside. SPX 500. So the S&P 500 continues to show signs of the formation of a major top, though the market will still need to break below that elusive March low at 2040 to confirm and accelerate declines. Gold. So gold has been attempting a recovery out from those recent multi-year lows, with the market recently breaking back above 1100. Still, we would need to see a break and close back above the previous 2015 base in the 1142 area to take the immediate pressure off the downside, and until then, a lower top is sought out in favor of fresh downside, potentially back below those recent 1073 lows and down towards key psychological barriers at 1000 further down.